you know that Bitcoin uses as much energy as some entire countries? Bitcoin has a massive network of miners called ASICs that require a lot of energy to mine and secure the Bitcoin network. So, for Bitcoin to be successful, it's critical to have access to cheap and reliable energy. That's why miners are moving in flocks to Texas and running their mining operations off of natural gas wells, wind turbines, solar farms, and on-grid applications. But up to now, there hasn't been a place for Bitcoin miners and energy producers to connect with each other. That's why Digital Wildcatters is bringing everyone to the energy capital of the world, Houston, Texas, for 2 days of network and learning at the premier mining event, Empower. Maybe you're an experienced miner or energy producer that's looking for partnerships, or maybe you're new to the space and you want to learn and get your foot in the door. There's going to be content and opportunities for people from all different backgrounds. March 30th to 31st, Houston, Texas, Empower. Get more information at digitalwildcatters.com. What's going on, everyone? Welcome to another episode of Oil and Gas Startups. We're here breaking in the new studio today. My man Jake Boaz with Crypto Yield Capital. Did your first podcast episode here in the new studio, so you should feel I don't know if you should feel special, but
dude, I feel honored, man. This is my first video podcast too, so it's perfect.
There you go. Yeah. So we're about 50% done with the new studio. It's gonna look pretty sweet when it's all up and running. Our guys have been working hard on it, but excited to get in here. Excited to have this conversation with you, man, because we've got our Empower event coming up around Bitcoin mining. There's a ton of talk around Bitcoin and cryptocurrency. And you came by the office the other day and we're talking to me and Chuck. And so wanted to get you on the podcast. Tell me real quick about Crypto Yield Capital, high level, what you're doing. And then I want to get into the nitty gritty. We were just talking Bored Ape Yacht Club and NFTs. And so I want to get into that a bit.
Yeah, man, this space is absolutely insane. I guess it just started. I was at a company called Black Buck Resources, private equity backed by Crested Fund Management. And it was so funny. I just loved crypto. I was all about it, making, a ton of money doing it. And I said, hey, I'm pretty much outperforming my private equity fund for what I thought was way less risk. And I just love doing this. And I simply want more capital to go do what I love, which is crypto invest. And so, yeah, man, back in October, launched the fund, Crypto Yield Capital, small fund, but it's been a ton of fun. It's been quite the journey, man.
Yeah, I think I told you when you came by, John Arnold was on our podcast, and one of my last questions for him on the show is like, if 30-year-old John Arnold, is still trading today in the cryptocurrency environment, would you be all over that? And he's like, man, there's guys out there making a killing right now. So just so much opportunity.
What's funny about that? I have a couple Houston hedge fund guys. They're like, man, your story sounds somewhat similar to John Arnold. I'm like, there's no way. Like, do not give me that kind of credit.
All right. Hopefully I have the same. Hopefully I have the same trajectory then. But no, it's crazy. People on the surface may be like, hey, why do you have a cryptocurrency hedge fund guy on Oil and Gas Startups podcast? But as you said, you came from Black Buck, you came from oil and gas industry. Let's talk about that real quick. Let's talk about your background and your story, because you're a young guy. How old are you? Like 28?
I'm 27.
27?
Yeah.
Okay. How did you get over to Black Buck? What did you do before that? And then kind of tell us about the oil and gas experience.
Yeah. So I went to Texas A&M University, did my undergrad in accounting, master's in finance, began my career at Barclays Investment Bank here in Houston. Loved that, had a ton of experience doing IPOs, M&A, all that good stuff. And then, transitioned from there to Black Buck, where I was the commercial development manager over there. We did a few deals with Cimarex and Chevron and some others. So great experience there. What was awesome also is Cresta was a first-time fund at the time. And so they needed somebody that was like, hey, on the operations company side of Black Buck, but they also needed help on the private equity side as well. Yeah. And so I got a lot of exposure to, hey, how does my private equity firm think about returns and risk and all of those things? And so when I compared, my risk profile to my returns and everything and my personal, assets in crypto, I was like, wow, this is, a great risk return given, what we did at Black Buck, which is, phenomenal company. They're growing at Just and Love, Samuel Oliver over there. Awesome guys, just brilliant and stuff. So I was just like, hey, I love this company, but I simply, want to step out my own and do crypto because that's where I always saw myself one day was I've been investing in crypto since 2016 or so.
Yeah.
Saw the huge ramp up and got absolutely wrecked in 2017.
Yeah.
So I still like invest my money, especially in the fund today,
Yeah.
as man, this stuff could go down 80% tomorrow, and I want to be totally prepared for that. And I think we just like if you picked the worst time to start a crypto hedge fund, it was October, like when we started.
Yeah.
Because
Probably so.
everything came down like 50
Which-
something percent, which is nuts.
Which in my opinion is the best time to start any business or companies in the downturn, because if you can make it in the downturn and survive and build your foundation, then come out ripping up on the other side, man. So we did at Digital Wildcatters. We went full time on this March 2020, just a few weeks before oil prices went negative. And so I get that sentiment 100%. And yeah, to your point of you started in 2016, that's when I started buying Bitcoin as well.
Smart.
And went through the whole ICO craze, lost a shit ton of money in ICOs, buying up pre-ICOs. I remember like, I was just thinking the other day, I was like, man, I remember putting 10 grand in this pre-ICO and never even got distributed the tokens.
Yeah,
Like,
I was in like 4 or 5 of those.
yeah, just I never even got the token, just don't know where my money went. And I look at crypto Twitter and what's going on Twitter, and like you start realizing it's like, man, a lot of the people in the space now, they're dealing with NFTs. They weren't around 2016, 2017. And that seems like it was just yesterday. I was like, damn, that was 5-6 years ago. And that's pretty that's pretty experience for the crypto industry, just considering it's only been around for a little more than a decade, and so still in its infancy, right? But
yeah, they say anyone before 2017, like you're a crypto OG,
Yeah.
But I feel like that is so true though, because a lot of the tricks that these guys try to put on Twitter, like, oh, hey, even the celebrities and stuff, like, hey, buy my token.
You've seen it already. Like, we saw that it's like the NFT thing is the same exact thing as ICOs, man. And yeah, like sometimes like I don't feel like I'm that experienced or aged in crypto, because I always feel like, oh, I missed the boat on Bitcoin, because I first found out about Bitcoin in 2011 and found out about it from one of my buddies in Midland. And Bobby Glossop, if he's listening to this, which he probably isn't, but he's the one that put me on. His Instagram handle was Crypto Cowboy. Bobby's big, kind of like corn fed, came from a oil and gas, oil field services family. Always tell him, he's like, Colin, Bitcoin's the future. It's the future. You got to buy some. And I'm like, whatever, dude, this shit looks like a scam. And, back then you didn't have exchanges where you could just go buy Bitcoin. It was actually kind of hard to acquire Bitcoin. And I remember, man, I remember it vividly, sitting on my couch in my apartment on my days off. I was roughnecking. It would have been nothing for me to put a week or 2 weeks pay into Bitcoin. And I remember trying to like get some, and I couldn't figure it out. I was like, I'm just going to buy some. And, it's like, okay, you have to sell something on Silk Road to get it, or you have to perform services for someone, like, do some contracting work to have them pay you in Bitcoin. And anyways, I just remember like just exited the browser and never tried to buy any again. And I'm like, fuck, man, I
remember I had this YouTube video that was suggested to me. This was like when Bitcoin was at $100 or so.
Yeah.
It said, why Bitcoin's going to 10,000. I was like, absolutely not. I said, that was the most ridiculous thing I've ever heard. I swear, like if it said 1,000 or something, if I had just clicked that video, I want to think like I'd be driving a Lambo today.
Yeah.
If I just simply clicked the video.
That's the thing, is that even like $1,000 Bitcoin was kind of unfathomable back then. Like you just didn't think that would happen. And it's so funny to me now when people take their victory laps. Oh, Bitcoin's dropped from 60,000 to 40,000. I'm like, dude,
yeah, this
is like clown world to me, because if you were there back in those days, you would have mentioned $40,000 Bitcoin. And
yeah, man,
like
I think it's so sad too, because people want to buy Bitcoin only when it's green going up, right?
Yeah.
Like their market psychology is so backwards. Like I had so many people calling me in November, oh, Bitcoin's going up. Oh my gosh, like it's going to 100,000. I need to get in your fund now, blah, 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 blah. And I said, hey, you know what? It could go to 100,000. You have to keep exposure, all that stuff. But man, then everything goes down, and the calls, don't happen as much. Like people don't want to buy, right now when, Bitcoin's at 39,000. But they want to buy when it's like 66,000.
And it's crazy because, like, in my opinion, it's so easy to time like this market. Like, it's so easy. Like, if you're running a hedge fund, and I know you have a much more detailed and complex model that you trade off of that we can get into here in a little bit and talk about your process. But if you're just a normal person, it's like, hey, Bitcoin goes up, it goes down. It's extremely volatile right now, just like oil and gas. You buy when it goes down, and really, if you dollar cost average over time, which is what I've done, it's a pretty fail-proof way to get exposure to Bitcoin. But yeah, I mean, you see it all the time. It runs in
Yeah.
cycles, and
Yeah. Bitcoin's just
people are
been
always asked
trading.
backwards on it.
Yeah. It's just been trading in a range from 30,000 to 60,000 since like, early 2021.
Yeah.
It hasn't really, like, if you just drew a chart out, it's just this. So people are like panicking on the way down. And then when it's going up, everyone's going to drive a Lambo one day, So it's just, it's so funny, man.
Yeah,
People,
it is.
I just think there have never been more bullish catalysts in crypto ever.
Yeah.
I saw all of the narratives we saw in 2017 that caused that, massive spike in the ICO craze and crash 80%. I just don't see that happening anytime soon, just because
100% agree. I think
Yeah.
that's one of the most interesting things to me about this bull run is that it didn't run off of hype cycle.
Right.
2017 run up was very like, I knew, like,
dude.
you could feel it, man. You're like, this was,
People don't understand how different that market was. I mean, you
Yeah.
had Bitcoin went from like 1,000 to 10,000 within like several months.
yeah.
It was
I mean, it was
nuts.
it was quick. Like, I remember being
Yeah.
down in Mexico, and I was in Guadalajara, and just over a couple of days, just how much it ramped up. I was like, this isn't sustainable.
Yeah, and for people that weren't around at that time, what was going on was, like Colin and I were talking about, you had these companies that would issue a token. An ICO is initial coin offering, and they had literally no product. They just had a team, and they said, "Hey, we're going to raise $50 million at a $50 million. We're going to raise $50 million at a $500 million valuation to go build the product one day." And then they take all the money, fly around private jets, and then just not build the product at all. A lot of them got absolutely hammered by the SEC. A lot of people went to jail. Some got away with it completely.
I knew guys personally. I'm sitting with them in Soho House in West Hollywood, and overlooking the hills. And they're like, "Yeah, we got this idea. We're gonna build this platform." And I mean, I was there with them. They put together the white paper in about a month, and then went and raised $30 million on it, and had no product.
That's how easy it was.
No product. Had a white paper. And after they got the funds, they went and got an office, which was a mansion in Beverly Hills, and then steak dinners every night, parties, never shipped product.
Yeah, and people are probably wondering, well, why the heck would you invest in something like that? But the reality was, you bought the ICO, and then the coin would 10x like when it started trading, like right after. So yeah, you bought in this ridiculous valuation at 50 million or whatever, but then to go trade at like $250 million, and people were making 5x, 10x, whatever. There's just massive craze. And then when the music stopped, I can't think of a single coin from 2017 that came out that made it. Is it like even in the top 1,000 today?
And that's what I tell everyone with NFTs today.
Yeah.
It's like, there were actually some legit projects from ICO craze. Like, I remember like Dragon Chain and a few of these, like, where are they today? Lots of money was raised and no products were shipped. And I remember like GAT coin. GAT was, I got in on the pre-ICO. Everyone was super jealous that I got in. It had so much demand. So I got in before it hit the market. The day it hit the market, it 9x'd. Yeah, just boom, shot up. And then guess what? Crashed, never came back. And that was actually like, in my mind, in my personal experience, that was the end of ICOs and when everything started coming down. And to your point, it was like some of the easiest money to make back then. I had friends, I mean, becoming multi-millionaires off of buying pre-ICOs and 10, 20xing their money in a matter of a month.
Yeah.
And it's hard to ignore that when that's happening,
You got to think like there's someone on the other side of that trade that it's pretty much a zero-sum game in that stuff. And I think, like you said, it's very similar with NFTs. We're going to have some projects that make it like apes and punks and all that stuff. But most, like if you just bought, an NFT of a hot dog and it's hot dog club and you're expecting to make a 10x, 100x, I think that money is slowly disappearing and all that stuff is going to go to zero.
Yeah.
But I think with Bitcoin, Ethereum, et cetera, it's a completely different market now. I mean, we have more institutional investment interest than ever. I know that Futures Bitcoin ETF, they raised over $1 billion within 2 days.
Yeah.
Which terrible product, by the way. If anyone's watching this, do not buy it, please.
Yeah, terrible product. Yeah.
Rolling contracts are, you're going to lose.
It's much like USO fund for oil, you know? Like it's a terrible product.
You're going to lose, 20 to 40% from the rolling contracts. It's absurd.
So I agree with you 100%. I mean, just the sentiment around Bitcoin and Ethereum is completely different than it was 5 years ago. And now let's talk about, because on the show recently, I've talked a lot about Bitcoin mining. I've had a lot of Bitcoin miners on here. Obviously, we're doing our event Empower, and so there's a ton of Bitcoin mining interest. And then with that starts coming the financial questions, just like oil and gas. It's like, hey, we can go drill wells and we can produce oil and gas, but then what can we do from a hedging perspective? What can we use as financial instruments, things of that nature? So this is actually the first conversation I've had on the show where we actually talk about hedging and trading cryptocurrencies and things of that nature. And you brought up, I mean, you were actually showing me your models and I was like, oh shit, this is really cool. But let's talk about, and I don't know like how much you can go into your strategy, but we're talking about swaps and all of these different things. And essentially my takeaway was there's a ton of ARB opportunity in the markets. Why don't you talk about like how you think about running a hedge fund from a cryptocurrency trading perspective? And then after that, let's talk about what we think the future of hedging Bitcoin is and how institutions and companies are going to treat that.
Yeah. So the reason we didn't get wrecked, with the crash in December was I was employing a market making strategy in cryptocurrency. So the market came down, I think 20, 30% through December of last year. And we posted a positive 15% return during that. The only reason we were able to do that is because essentially what you can do in crypto is take an asset like Ethereum and then pair it with another asset like US dollar coin. And you can market make for people that want to go on and buy Ethereum and US dollar coin back and forth. It's a really complex process, but it's through this new technology called an automated market maker. You don't have to go through Coinbase, FTX, some of these other exchanges. We can trade directly peer to peer. Every time someone does that, I make anywhere from 1% to 0.05% of transaction fee on that. So great, really awesome strategy. I think a lot of these Bitcoin miners, I know we talked about the modeling and stuff behind it. A lot of these Bitcoin miners have that decision tree of, hey, when I mine a Bitcoin, should I sell it and lock in my ROI on that mine, or should I hold it? Because I think ultimately Bitcoin is going to go up over time. But if I have private equity capital that wants to lock in a 25% return, which I think in this kind of market and everything, you could get your power costs down is very, very possible to get over 25% return doing it. Like, how do you manage that? And I think there's a third option, which is you bridge the two, where you sell half and you do like a market making strategy, like I employ at Crypto Yield Capital, where you're taking on about half the beta to Bitcoin. You still have exposure, but through trading fees, your annualized return on top of that capital is anywhere from like 40 to 80%. It's crazy right now.
Yeah.
And I know that's why some people are like, hey, this sounds somewhat similar to what John Arnold did with natural gas trading back in the day. And I think it's a little bit more similar to, when you had pink sheets, back in the early days of trading where, the bid-ask spread was super high and the fees were, extremely high.
Yeah.
But I think ultimately there will be new capital enter the space. So right now there's just several $1 billion in liquidity in crypto.
Yeah.
And when you think about liquidity versus the market cap, like total crypto market cap's like 2 trillion, something crazy. And you have more demand for trading than ever. And what I call like a liquidity crisis in crypto, that's only going to last for so long.
Yeah.
I think we have like 2 to 3 years of that left. But ultimately, I think that Bitcoin miners could really benefit, from a strategy like that. I guess another option you'd have is, go short futures or something. But
Yeah.
unless you have a dedicated crypto person that also understands, crypto futures, it's very difficult to play that game. In my
Yeah.
opinion.
Yeah. So let's dive into all of that a bit, because I've seen several different strategies. I mean, when you talk to institutions, they want a return on their money,
Mhm.
right? And so the way that they look at it is, okay, we can sell Bitcoin and make our money back, get 18-month payback or whatever that is. But there is some liquidity in futures market. So we could hedge and have optionality at the end of our 18 months. And at that point, you can do what you want. I'm kind of, you know, the way I think about it is I want to hold as many sats on my
Mhm.
balance sheet as possible, right? I want to stack as much Bitcoin as possible. And so I look at it, I'm like, I don't want to sell off any of the Bitcoin, enough to cover OPEX, but I want to hold as much Bitcoin as possible. But what you kind of opened up my eyes to the other day was, hey, you can have just raw exposure to Bitcoin. Okay, you think Bitcoin's going all the way up to $1 million a Bitcoin. That's great. But look at what happens if you hold half of it and then stake the other half
Mhm.
for trading. And I mean, the returns
It's
grow
nuts, man.
exponentially.
It's nuts. And it doesn't, the problem with it too is you show people that and they're like, this is too good to be true. There's no way it's happening. And I thought the exact same thing back in 2020 when I first started doing this strategy. I was like, there's no way.
Yeah.
There's something, I'm missing something.
Yeah.
And I just kept diving deeper and deeper. I'm like, I'm missing something. There's no way. And
Like, it's too good to be true.
it's like this is so ridiculous. But it really just came down when you run the math out, and I use the same math that automated market makers like in those models
Yeah.
use, like the exact same math, and I pull in real numbers, and it's just accurate. And no one really wants to. That's why I'm like kind of hesitant to even share this on your
Yeah.
podcast. It's
Yeah.
like all of us in the people I know doing it, they're like, dude, get out of my pool of liquidity, man. Like, don't come in my pool, bro. You're like, you're diluting me. And it's the absolute opposite of when you buy a crypto and you want everyone to buy it, right?
Yeah.
It's the exact opposite, where if you find that new pool that's paying more like 200%, like some fancy new protocol that has very little liquidity, but does some new, has some new technology that's better than its competitors, and
Yeah.
people like trading on it, and there's even less liquidity, you can make even more. So
Yeah.
it's this kind of game we're playing. And I think, some people would be upset with me if I,
Yeah.
dive into it too much.
So, with you, you're going over to Uniswap, and you're moving in and out of different cryptocurrencies. We were just talking about NFTs. Does trading strategy bleed over into NFTs, or is this only cryptocurrencies?
Yeah, it's only cryptocurrency. I don't think you'd have enough volume for NFTs to do something like this. And
Yeah.
plus, a lot of that is you just like OpenSea's taking that fee.
Yeah.
So it's a similar model where, I think they do 2.5%, which is ridiculous, by the way.
Yeah.
I think
they've got a great business.
they have a phenomenal business. And I think a lot of crypto people are upset that they're, going the IPO route.
Well, yeah, I mean, it's the fiat route, right?
Yeah,
they're
they're doing it the legit way, and I know that market will get disrupted where those fees are going to come down, I think. But but unfortunately, there's no decentralized way yet.
Yeah,
I think I would look at that very closely. But the problem is if
here's the problem. Let me touch on that. Let me get on my soapbox. There will never be a decentralized way to do that. And the reason is because one, there's only one truly decentralized protocol, and it's Bitcoin. Ethereum's not decentralized. Any of the other 1,000 blockchains out there aren't decentralized. Don't give a shit what you say. There's a central party.
I completely disagree with you.
Let's get into it right now. Let's get into it right now. I
Bitcoin Maxi over here.
Bitcoin Maxi by way of being baptized by fire. Because look, told you, I used to be hyped on all the ICO projects back in the day. And when you start really looking, like, this is what I think makes Bitcoin so fascinating, is that, okay, we have no idea who Satoshi is. Probably dead. There's no way that wallet's staying inactive during all of this. I just don't think there's any human on the planet that.
I hope they don't dump all that Bitcoin.
Yeah.
That would not be good.
But, why wouldn't they have done that already? $60,000.
It's the future, man. If you invent Bitcoin, you believe it,
Yeah. Yeah. But, let's just say that person isn't alive. So now we've got decentralized network of miners all across the world. Hash rate is continuing to increase. There's, in my mind, a lot of correlation between the price of Bitcoin and the amount of hash rate that is online. The more secure the network is, the more value there is in the network, and that's reflected through the price of Bitcoin. It's a beautiful fucking system. Now you go over to
agree. Yeah, we're aligned. So
right.
far, we're very aligned.
We're aligned so far. All right, I got you there. Now you go over to Ethereum. Ethereum is not decentralized. You look at it, it's like, okay, we had the massive hack of Ethereum back in, 2016, 2017. I can't remember what the year was, but rolled back the ledger and had a hard fork. That's why you have Ethereum Classic now. That was my first, like, okay, is this decentralized or is it not? How can you roll back a ledger and have a hard fork? Then it's like, okay.
This episode is brought to you by our friends at ComboCurve. If you haven't heard, Aries and PhD went out and ComboCurve is in. ComboCurve is the cloud-based operating system for energy companies. The single integrated platform helps your engineering teams become more agile, precise, and efficient than ever before. For the first time ever, you now generate type curves and forecast thousands of wells accurately and in a fraction of the time. Oh, and it can automatically run these forecasts every single day. What I love most about the ComboCurve team is their work ethic and actually caring about their customers. Every time I talk to the team, Armand, Jeremy, everybody else over there, they're reinvesting into growing the development team to tackle any challenges that their clients may be facing. But don't take my word for it. Go over to ComboCurve.com, read the dozens of testimonials on their website from clients like ARM Energy, Laredo Petroleum, Rock and W Minerals, and many more. Request a demo, and these guys will get you taken care of.
Ethereum works on proof of work, but now it's moving to proof of stake. And you see their flow chart of how they're moving to proof of stake, and it's a clown show, in my opinion. But when you see those things, it's like not even Ethereum. Ethereum has a central team that is making decisions. It's not a truly decentralized organization. People started figuring out that, oh my God, OpenSea and MetaMask aren't decentralized.
Oh yeah, they're
applications. Our shit's getting hacked, and all of this is happening. I'm like, yeah, these are all central. These are all platforms that are controlled by central bodies. So I don't think you can create a truly decentralized application because it takes away incentive to build that. I'm a capitalist, and I think people build things to have a reward. You are doing a hedge fund to get a return and make capital gains. All my fucking foam towers are falling around here. We're recording this podcast and foam towers are just falling down around here. I create digital Wildcatters, and I have a vision of the impact that digital Wildcatters is going to have. But at the end of the day, I also create businesses because I want to make money too and have some return on that. And so how can you create a truly decentralized network where you don't have a central team that has some incentive to make that work? That's how I think about it. Would love how
I feel you 100%. And Vitalik would actually agree with you on proof of work. He did not want to move to proof of stake. He thought it's a bad idea. He was slowly convinced that for the future to happen, we have to move to proof of stake. That does remove some decentralization from the system. But ultimately, I think that those guys are just galaxy brains.
Yeah.
For real. And they will ultimately move it to a decentralized system. Ethereum is the most decentralized system we have today outside of Bitcoin.
Yeah,
I would say.
I agree.
So like Solana, all these other blockchains, their centralization is much, much worse. Yeah. And I think they're moving towards it. But I think in general, all of this talk about decentralization to some extent is an illusion, because people, like, I have hardcore crypto friends that go, Jake, the government can never shut down Bitcoin. I go, they can stop you from converting your dollars to Bitcoin very quickly.
They can stop the exchanges.
And that would nuke the price. And I'm like, the government can ultimately, stop Bitcoin.
Yeah.
And so we do have a risk. Now, they can never prevent you from sending that Bitcoin if you truly own that Bitcoin somewhere else. But I mean, we've seen, Coinbase, if you don't own the keys to your Bitcoin, and FTX, Coinbase, whatever, and you're in Russia right now, you can't move it.
Yeah. I mean,
So,
look, I'm
yeah.
full
There are big problems.
full
Yeah.
agreement with you there.
Yeah.
So let's get some clarity there that governments can't shut down the Bitcoin network.
Mhm.
They can make it extremely hard for consumers to access Bitcoin, which I just told you back in 2011, it was hard to buy Bitcoin.
Mhm.
And now you have Coinbase, Gemini, and a ton of other exchanges across the world that have made it easy to buy Bitcoin. But even then, people still are like, what am I doing? I don't even know what Bitcoin is. I'm buying it. And the governments can shut those down. No problem. I mean, just like you said, you're seeing
Mhm.
it. You're in Russia, you can't access it. And I also don't think that the future is people holding their keys. And I mean, just the average person isn't capable of doing that. So
Mhm.
I do agree with you there that in theory, the Bitcoin network is decentralized and can't be shut down by governments, but the government can do enough things to plummet the value of Bitcoin.
Well, even if they said it's illegal to hold Bitcoin, I mean, I feel like most people would,
Would not
get
do
rid
it.
of it.
Yeah.
I'm not like, I don't know. But at the same
or
time,
it's illegal to mine Bitcoin.
yeah, like China came out
China
and
did
that.
it.
Yeah.
China did
So,
it.
yeah.
Yeah.
And they can shut it down.
Yeah.
But ultimately, I mean, Bitcoin will always have a place. I actually don't, people ask me all the time about regulatory risk. And I think I would have been much more afraid to start a crypto hedge fund like 2017 when you had all those bad actors. But now in, 2022, the US government has been more crypto friendly than ever because they know that if they stifle innovation here, it will occur elsewhere. And there are a lot of countries that would love to be the crypto hub of the future. We've had Silicon Valley last 20, 30 years, whatever it's been now.
Yeah, like El Salvador, like
Yeah.
fully embracing it.
Yeah, tech created the largest distribution of wealth in history, and crypto is doing it again.
Yeah.
And I know people joke about this, but it's like, if you're not in crypto, you're going to miss out.
Yeah.
I really genuinely believe that
Yeah.
on generate the next large generational wealth creation event. But and we can also talk about dollarization.
Yeah.
So cryptocurrencies are priced in the US dollar.
Mhm.
Other countries hate that. China hates it. Russia. They want to be the currency of the future. Right now, though, people across the globe only want US dollars. They don't want their native currency most of the time.
Yeah.
And using cryptocurrencies like backed by the US dollar, by Coinbase, like US dollar coin, you have Tether, a bunch of that are just backed 1-to-1 to the dollar. They pretty much opens people to be able to have a US bank account that they control and use their currency. So I fully believe that once these technologies get better, I'm going to go on Coinbase, convert my US dollars to US dollar coin. And then I can go to France, and any merchant in France is going to take that US dollar coin. And they're not going to want to use the euro. They're going to want to use US dollar. So the government loves that, right?
Yeah.
Because countries have been talking about de-dollarization for past 10, 20 years, and they haven't been able to do it. They never will, in my opinion. But this just further dominates the dollar. So the US government now is actually like, heck yeah, crypto, like, let's do this.
My thing is, I try to avoid getting in crypto arguments on Twitter with a bunch of oil and gas people because I just learned years ago, it's like, it's not my responsibility to change people's mind. It's going to happen regardless because you have very simple economic principles in play, which is supply and demand and network effects. And the network continues to grow stronger and stronger day after day. And so when people are like, Bitcoin's going to get shut down by the government, I'm like, hey, look, 2016, 2017, I was afraid of that. But now it's too big. It's too big.
Yeah.
And people are seeing the opportunity. You got Ted Cruz coming and speaking at our Empower event because he sees the opportunity that Texas has to be a leader in hash rate in the Bitcoin network. Same with Governor Abbott. Like, these are people that have the power to open up the paths to make this a institutional. And on that note is talk to institutions, and they're not seeing the regulatory risk as much as they would have back in 2016, 2017. So, and that's the big thing, because that's what they look at is, what are my risk in this? What is regulatory risk? And now they're starting to get comfortable with it. So
yeah, and I would actually applaud, one of the few times I would applaud, our government on something. They've actually taken a very strong look into crypto the right way. They've had tons of hearings on it. Ted Cruz, educated himself on Bitcoin mining. There's a lot of, a ton of misinformation about how Bitcoin, they say, oh, it destabilizes our grid. It actually helps the grid.
I saw an article come out on Bloomberg like 2 days ago about how it's damaging the grid, the Texas grid, and I'm like, it helps bolster the grid, it helps fortify the grid, and so much.
It's counterintuitive, to what people think. But Nick Carter, I don't know if you follow him on Twitter. He has the best stuff on it. Actually, my buddy's friends with him.
Cool.
So I had like a call with him. So he's like really smart. Smart guy.
He had the best. I was actually
stuff on
supposed to go to Austin today for a Bitcoin event. Nick is speaking at it, and some people wanted me to meet him. So obviously I'm not in Austin right now, so I'm not going to get to meet. But this podcast kept me from doing that. I was like, I got a podcast, so I can't come.
Well, that makes you feel good, man.
Yeah, that's what I did. I put some weight into it. But yeah, that's dude, I agree with you 100%, and I think only people like us that have seen the evolution of the ecosystem and sentiment over the last 6 to 10 years understand of like, hey, look, this is legitimate now. All those concerns that you're bringing up, like, remember like 2014 crash of Bitcoin, like people thought Bitcoin was dead, like legit dead. And then 2017 crash, I mean, again, oh shit, Bitcoin's dead. And that was a time for regulators to come in and end Bitcoin if they wanted to, like that window. And I was actually worried about it back then. Now you see it drop from 60,000 to 40,000 or 30,000, and you're like, oh, this Bitcoin doing what Bitcoin does, but don't see any pressure from SEC or the feds. Actually see governments around the world embracing Bitcoin. And I think that, when they start talking about, oh, we're going to, put some regulatory around it, I'm like, that's good. That's good. Because now you have the path for institutions and everyone to get involved, because they say, all right, this is how the feds look at Bitcoin. We can get into it.
I've never understood because there are some crypto people are like, oh, it's so bearish, like regulations are coming. I go, you guys don't have any idea how much capital is sitting on the sidelines, like that wants to get involved. I mean, the US hedge fund for crypto market was $3 billion as of 2020, according to the PwC report they do. I bet it's much higher now. It's probably, let's say it's 100 billion in hedge funds and crypto. That is a joke. If you look at, the global hedge fund markets, it's in the trillions, like hundred trillions of dollars. And I go, the global market cap of crypto, and that includes a ton of just terrible stuff in that 2 trillion that isn't real. I'll say it's really more like, 1.5 trillion of actual good projects. Man, that's a joke. Like the global stock market is, hundreds of trillions of dollars and stuff. And so the amount of money that can come in this space quickly, and when Blackstone, whoever it is, can say, oh, hey, my clients we're going to start a small fund, and, my clients can just buy Bitcoin through it, and we're going to own spot.
Yeah.
And a spot ETF is going to come out. That's actually a good product, unlike the futures one.
Yeah. It
is going to open up the floodgates and, in my opinion, create a massive global bubble. People are like, oh, it's a bubble now. It's like, no. If it's going to be like the tech bubble is like $20 trillion or so just for inflation.
Yeah.
We're at 2 trillion, let's say, in crypto.
Yeah.
It's going to be a global bubble, and it's going to go to at least 50 to 100 trillion. Opinion. Anyway, that's my long term.
Yeah, I agree with you. Agree with you 100%. There's going to be a ton of opportunity in the space. I'm actually, it's funny because you brought up the point of me being Bitcoin maxi. I was talking to an institution the other day, really large institution, endowment fund, and some of their junior associates were in there, and they're like, what do you think about proof of stake? I was like, I think proof of stake is a scam. I think it's part of the fiat world.
Come on.
I was like, proof of work I believe in proof of work. And but then, I'm bashing and shitting on all these other cryptocurrencies. But then Like I'm actually bullish on NFTs, super bullish on NFTs. I think that a lot of the projects out there right now are trash, junk. You look at Bored Apes, you look at Punks. Like I wish I had the money to buy one right now. I don't. So I'm just like missing out and getting major FOMO. But you look at a company like Digital Wildcatters that has a large engaged community. And now I'm looking at, okay, I can layer NFTs over our community that have true utility. Hey, guys, once a year, I'm going to throw a party in Miami. And the only way you get to come down is if you have the NFT. Hey, you can get 50% off our tickets at Empower. You get exclusive content. There's so much utility that can be used in NFTs to further strengthen community. And so I love NFTs.
Yeah, I think the technology itself is fascinating.
Yeah.
And I know Mark Cuban talked about, hey, like our Mavs tickets one day are going to be NFTs
100%.
because you can totally just verify it.
Dude, there's so much. That is like one of the best use cases for NFTs because there's actually a ton of fraud. And we got more foam tiles just falling down. I don't know if this is on camera, if y'all can see this. I can see we typically glue the foam tiles to the wall, but Mac just wanted to get them up real quick, so he duct taped them in. It's not working, so
it's okay.
It's the trial and error.
It's a metaphor.
The first podcast in here.
It's a metaphor for NFTs slowly falling.
Yeah, just slowly falling off. Yeah, this is a representation of my life right now. But no, tickets. I mean, there's so much fraud and scams out there around tickets, and you've heard it like, oh, I bought tickets off of StubHub, and I get there and they weren't real tickets, and so being able to have an NFT, I mean, that's a no brainer. Now the problem is like, all the friction in the process of buying NFTs, and it's not easy to go buy Ethereum and then transfer Ethereum to your MetaMask, and then you're like having to fuck around with gas fees. And I understand why Ethereum is going from proof of work to proof of stake. I mean, gas fees are just
we have to, right?
Yeah.
Because for me to buy a coffee with Ethereum, it needs to cost less than a penny for me to transact.
Yeah.
And so for people to actually want to use a lot of these systems built on top of Ethereum, it has to be cheap.
Yeah.
And I had a ton of people that said, hey, Jake, how do I get involved in crypto? And I said, okay, here are the steps, right? Like if you even want to attempt to, go use even a protocol that I provide liquidity to, buy Ethereum, put it in Coinbase, send your Ethereum out to a wallet that's compatible, go on this website, input the right, address for the token, or, because you buy the wrong one, you're in trouble. I was talking to my sister the other day about, she wanted to buy an NFT and I had to walk her through the process. I'm like, this is the average person is not going to do this.
They're not going to do it. Yeah.
And so it's going to take time. I think a lot of the stuff that I do will just be in the background. Like someone will have an iPhone app and they'll say, I want to buy this and I want to do this. And all my stuff is going to be on the back end. They're going to be, their liquidity is going to be routed through me.
Yeah.
And they'll never know it.
Yeah.
And they'll pay a small fee in gas, like a couple cents. So that's why I think we have to move to proof of stake.
Yeah.
Ultimately.
Well, have you used Bitcoin Lightning Network?
I have. I think it's great. It's just the problem, and this is the biggest issue I have with Bitcoin, which makes me not a maximalist, is I cannot build decentralized finance applications on Bitcoin today. I need the power of Solidity, the programming language that Ethereum uses.
Yeah.
Because they have companies right now. This is why I'm so bullish on DeFi and this stuff in general. I mean, you think about a company that you construct entirely through code. There are no buildings, there are no employees really outside of the developers. There's no capital expenditures because they're borrowing liquidity from me to use it's like almost like CapEx. They're almost borrowing my CapEx if you think about it. And so you have these companies that exist on the Ethereum blockchain, and if everyone stepped away tomorrow, and this has happened to some projects, where developers stay away and say, hey, the protocol works, I'm going to step away and let the people use it, just generating cash flow. So like there are no other businesses today that operate like that, where my revenue essentially equals my earnings. And so the companies that get built on these networks are going to go nuts. Like let's talk about, like, you could build the next Facebook through code, and
See,
it goes absolutely nuts.
Agree with you 100%. I just think that those things are built out on Bitcoin protocol, and you have certain layers. And if you look at the evolution of the internet, I mean, come out with IP protocol, and this is a lot of computers to connect, and then you start getting several layers of protocols on top of that, and boom, you get HTTP. That allows us to build websites and content and what the internet looks like today. And I think that Bitcoin has the same potential for that. You start stacking on layers, and I can't remember. I saw a Twitter announcement the other day, but someone came out with an application and build all your websites and everything on top of Bitcoin protocol. And I was like, yes, that's like,
I think that's certainly possible, but I feel like, I don't know, I have a perfect analogy of it, but Ethereum was built to, have all these applications run on it.
Yeah.
Bitcoin, you're trying to kind of like duct tape Bitcoin to get it to work. You know what I'm saying? It wasn't built from the ground up for it.
Yeah. And to that point, the protocols that the internet were built on weren't the best protocols. They were the ones that had adoption. And so best technology doesn't always win. And I'm not making an absolute statement here saying that Bitcoin protocol does win or doesn't win, or Ethereum does or doesn't, but superior technology doesn't always win. Like, one of my favorite use cases is you looked at Microsoft Teams and Slack, and Slack had clear first mover advantage on internal messaging communications. And you look at the chart, and they're growing. COVID hits. Microsoft Teams comes out of fucking nowhere. Exponential growth, just absolutely runs circles around Slack. Why was that? It wasn't necessarily better technology than Slack, but they had distribution and adoption because everyone at these companies already had Microsoft Office installed on their computers. And so Microsoft Teams just absolutely ran circles around Slack, even though I would argue Slack is a better product in technology. And so I think about like those things as well. But who knows? I don't like to speak in absolutes because someone's going to take this podcast 15 years later and be like, look, jackass, you're way off base. So I got to leave some room for error in my comments. But I really like the way that I view Bitcoin is the infrastructure for the next evolution of the internet. And I look at the Bitcoin network as AWS essentially. Like this is the server network. This is, the most reliable network in the world. What makes it so special is that it has financial incentive for the participants, and boom, we can start stacking layers on it and building on top of it.
See, it's funny. Yeah, you think it's Bitcoin. I think it's gonna be Ethereum, and we could both be wrong. I mean,
we could both be wrong. Yeah,
crypto moves so fast. That's what people are like. Oh, what should I buy? I'm like, I tell them, and then 6 months later, they're like, oh, should I buy this? I'm like, oh, dude, I've moved on from that coin. I moved for like a month.
That's trash. Yeah.
That technology's way old, man. It's like I feel like you have Bitcoin that's like MS DOS back in the day, Windows 95, et cetera, and then Ethereum is now Windows XP, and there will be Solana. You could say is Windows Vista.
Yeah,
Solana has a lot of its own issues, and we don't have to get like all technical about blockchains and stuff, but
we don't have to nerd out.
I think, but ultimately, there's going to be, I think, 3 main blockchains. I think Bitcoin will be one.
Yeah.
I think Bitcoin is still the best store of value we have. Outside of maybe gold, but can argue about that for another entire podcast. I think Ethereum will be one, Bitcoin will be one, and then you'll have a third competitor, and it's not going to be Cardano. Cardano's terrible.
I think that's a safe assumption moving forward in the future. So it's exciting times, man. I love the intersection that we're seeing of oil and gas and cryptocurrency. Just like
who would have thought, man, that oil and gas investment banking background would be so applicable to cryptocurrency?
I know. Yeah. Funny, it's just the similarities between mining for oil and gas and mining Bitcoin, and then the finance side of oil and gas and the finance side of cryptocurrencies. The parallels, the similarities are wild.
Like the mining difficulty is basically a type curve, in a way.
It's nuts. It's weird. Like I'm gonna create a blog, a piece of content that makes all of those analogies between oil and gas and Bitcoin mining. But man, I appreciate you coming on the show and diving into this. Guys, if you're listening to this and you're an accredited investor, high net worth individual that wants to talk to Jake about his fund, how can they find you? You got a website, or are you on LinkedIn?
LinkedIn's easiest. You also go to cryptoyieldcapital.com.
Cool.
There's another competitor that's like cryptoyield.com. .yield or something. It's not that one. It's not the one on Google, unfortunately. Yeah, you can find my website. You can just, I think LinkedIn's the best. Just Jake Boaz, and find me.
We'll drop some links in the show notes. So if you guys want to reach out to him, great guy just to talk to and shoot the shit with and learn about the space. If you're listening to this, gonna try to drop this episode before Empower. It's coming up here in a couple weeks, March 30th through 31st. It's gonna be a badass time. Expecting 1,500 to 2,000 people. Lots of great Bitcoin miners, energy guys, finance, and at minimum, it's just gonna be a big party. Free beer starts flowing at 5 p.m. both days. So hope to see you guys there. We'll catch you next episode.